Yeah, good afternoon, everyone. I am CA Megha Saxena, Secretary to Auditing and Assurance Standards Board of ICI. Today, on behalf of the board, I would like to welcome you all to this webinar on SA 505 external confirmation. I'm happy that we have been joined by many participants as of now. Today we'll be taking the session on external confirmation 505 as well as that SA 500 require that the auditor should obtain the sufficient and appropriate audit evidence in order to report that there are no material misstatement in the financial statement. So, the SA 505, the OX confirmation are the persuasive form of audit evidence which help the auditor to ensure that there are sufficient and appropriate audit evidence available in whatever form he is reporting. So, with this, I would like to state a few words about the faculty. Today, we have CA Praveen Kumarji with us, who is a partner, senior partner, and the national head in ASA Associates LLP. He has 35 years of auditing experience, and he is also covering the area. He has also covered the area of statutory audit, forensic, and internal audit. He has also been in ASB, AASB, DAB, and NACAS, and the other study groups of the ICI. He has audited the large PSUs like GAIL, NBCC, IFCI, SBI, LIC, CCI, etc. He has the experience of audits under the PCOB and NFRA environment. He has been the faculty of many eminent organizations, and I think his name is enough. He needs no introduction. So thank you, sir, for sparing the time and efforts for encouraging the participants today and sharing your practical aspects. And with this also, I would like to introduce one more thing that ICI has launched the DBCP, Digital Balance Confirmation Portal, at the BOFA event, which was organized on 1st February 2025 in Delhi. So this portal, many of the auditors are using these portals for obtaining the external confirmation from bank. This portal is live with 4 banks now: UCO Bank, Bank of Maharashtra, Punjab National Bank, and the Canara Bank as of now. So we'll be adding few more banks also. ICI is working with the PSB Alliance and the Indian Bank Association along under the supervision of RBI for developing this portal. So we would like to encourage the participant to use this portal also. So I would like to again welcome all the participants and like to actively engage in this today's conference and wish this program a great success. Thank you.
Thank you very much, Meghaji. Good afternoon, everyone. I will just share my screen and please let me know if you are able to see the screen. Is my screen visible?
Yes, sir, it is visible, sir.
Okay, thank you very much.
Yes, sir, it is.
Thank you. So, this discussion on external confirmation is very critical and very important. But even before we start, I must say that whatever we speak as a faculty on the webinars or in the conferences, we share our own opinions. These views are personal in nature. And in case you need to take a professional call, you need to refer to the official literature which has been issued by the Institute of Chartered Accountants of India in terms of standards on auditing, in terms of guidance notes, in terms of technical papers. So please use those literature only which are official for taking the professional call. What we share is primarily our views and practical issues which we face in our day-to-day life as a professional. So this standard on auditing 505 is very, very critical and very important standard. All of us are aware that, till some time back, few years back, the confirmations were kind of taken very lightly. But when one particular accounting fraud had happened, where the client themselves printed the confirmations and provided to the auditors. And those auditors were, they had to face the regulatory, heat. And then the seriousness in getting confirmations directly, it came into play. So we'll discuss primarily from the standard on auditing, which is 505, but let's discuss at some of the points, to begin with. That why do we need confirmations? Like, Meghaji initially said that we need to have reliable and strong evidence to reach to have these documents or evidence in our audit work paper files, so that when somebody asks a question, we should be in a position to tell the reviewer or the regulator that whatever opinion we have arrived at, that is based on these evidence. So confirmations, which are external confirmation, they provide direct evidence from if they are taken from the independent parties. They are strong audit evidence rather than internal documentation alone. Second point why the external confirmation matter is that they are free from management influence, reducing the bias, and they are increasing the objectivity. You can imagine a situation that you are doing an audit and the management is giving you a confirmation that we have this much balance in our bank account. If you go to the bank and ask whether this account contains this much balance, then the evidence which you will have in your file coming directly from the bank will be much, much more objective. And internal confirmation, if you take from the management, they will always say that whatever is mentioned in the balance sheet is giving the right picture. Then independent verification also help you in uncovering if there are any misstatements and fraudulent activities. Let us understand why the financial statements are prepared. The financial statements are prepared in order to help user taking a decision. There is an objective which has been defined in the framework of the accounting standards. So that means if the financial statements are providing information about the performance of the company or state of affairs of the company, they should provide true and fair view. And one of the characteristics, is that these financial statements should be reliable. So how do we make them reliable? An auditor need to give an opinion that these financial statements are free from material misstatements, are giving true and fair picture of the performance of the company and of the state of affair of the company. So in order to meet these objectives, the auditors will need to carry out their audit procedures, and they will need to, collect audit work papers, which will include the audit evidence, which will demonstrate that this auditor has reached to an opinion only after looking at these evidences. So external confirmations are very important because they give you reliable information. They come from independent parties directly, and they also help you in detection of frauds. Primary goal, main objective of why the standard on auditing 505 is there. It is to give you guidance if you are an auditor on the use of external confirmation as an audit evidence. So primary goal of this standard on auditing is to design effective confirmation procedures in evaluating whatever responses they receive, and then to draw conclusion from whatever the results are coming from sending these confirmations. There are some practical issues which come up, and some of the auditors may come up and say that, okay, we have sent 100 letters for confirmation, but we have received only 30 or 40 or 35, and we have not received any response. So we will look into this question as well when we will go through the presentation. but most importantly, how these confirmations are providing support to auditor, in reaching to the opinion whether the financial statements are giving true and fair view or not. So the objective is to how to design and how to evaluate the confirmations which they have received and how to draw the conclusion. That's the major objective of this standard. So there are different kind of confirmations which the auditors would say. You might have heard that the auditor may say that, okay, this is the balance which is shown in the books of accounts of this company. Please confirm whether this balance is right or not. So then this is one way of writing it. The other way of writing is that, okay, this company is having this much balance, in your account. Please confirm. And if you do not confirm within next 1 week, we will assume that you are confirming it. So there are different ways, where, you can seek the confirmations. One is direct positive confirmation, which is always a preferred approach, where the auditor will ask the debtors or the bankers or wherever the confirmation is sought for, when it requires a direct response, whether the information is correct or not. Another way of asking for information is that, okay, this is, I believe that this is your customer. Please confirm how much is the balance lying. So that means you can ask for a verification of specific information. You are asking for a specific balance. So these are slightly difficult to get, but positive confirmations are, where you are asking for direct response. The easiest one is response only required if the information is incorrect. So you are sending a letter that this books of accounts of this company is showing a balance lying in your account is amounting to this much. Please revert if there is any disconnect or if this amount is not correct. Many times the auditor will not receive a response, and how to carry out alternate audit procedures, that is something which this standard will guide. So let us understand when the auditor is carrying out the audit procedures or trying to give their opinion, what are their primary objectives? What are the key objectives of the auditors? So if you recollect, there was a very old case decided which said that the role of the auditor is like a watchdog, which will remain there around, and in case that something is wrong, if it is not right, the auditor will make a noise. So like now the definition of auditor is undergoing a change. It's not a watchdog only. There are a lot of discussions happening and a lot of expectations from the regulators that it is not only that you will make a noise, but you will dig deep, and you will also look into whether there is any misstatement happening or not. So as per this standard on auditing, the auditor's prime objective is to obtain relevant and reliable audit evidence through the use of external confirmation procedures. This is the responsibility of auditor as per SA 505 to obtain external confirmations directly from the third parties. That means you need to document what kind of procedures you carried out. You need to have a control on whatever confirmation procedures have been sought. So you also need to understand that it's not only that you will be sending those letters of confirmations and your job is done, but you also need to see what kind of responses are being received, and whether you will be in a position to draw your comfort. And if your conclusion is coming that, okay, I have sent 10 confirmation letters, and out of these 10, whatever responses I have received, 9 responses say that the numbers which have been mentioned in those confirmation letters are not correct, then you can understand what kind of what kind of conclusion you will arrive at. You will understand that perhaps you will need to enhance your substantive testing, and you need to go into alternate audit procedures, because if 9 out of 10 responses are saying that the numbers which have been mentioned in the confirmation letters are not right, there is something seriously wrong. So as an auditor, you need to maintain your control, which all confirmation were sent, which all responses were received, which all responses were saying that the numbers which have been mentioned is not right, and how did you rely on other audit procedures or alternate audit procedures which you had carried out. You will need to maintain all those records in your audit work paper file. Now, how do you design your effective confirmation procedures? Like Meghaji said in the beginning, that the institute has launched this tool where you will write directly to the banks. 4 banks have already signed up. So if you're a client, you're doing an audit, and this client has a banking relationship with one of the bank, let us say UCO Bank. So you will need to mention it in your confirmation, and this tool will help you directly connect with the bank. So your letter will go to the bank, and bank on the tool itself will approve whether the balance is right or not. There's a procedure which needs to be carried out. There has to be an approval by the client, and the bank will look into that as well. So it is just one tool. There are other tools also which are available in the market. But please remember that the institute has given guidance to the members that in case you are using a third-party tool, responsibility of getting a direct confirmation remains with the auditors only. So I give you an example. So if you are using a third-party tool to communicate with the bank, and bank is giving you a confirmation which is coming to you through the tool, in case something happens in between the this communication, in case there is some some alteration or some miscommunication happens in between, the ultimate responsibility remains with the auditor only. So you cannot say that as an auditor, I have used the tool and I have sent a confirmation to the bank. Bank had confirmed and I have downloaded that confirmation from the tool. Somebody in between did a hacking on the tool and they changed the balance. So I am not sure. So my responsibility was over. No, your responsibility was not over. It has been very clearly mentioned by the institute that ultimate responsibility remains with the auditors only when they are using the tool. So what are the effective procedures which an auditor should use to how they can design it? They need to understand, the auditors need to understand what is required to be confirmed. So first of all, the auditors will need to identify specific information which will require a third-party verification based on the risk assessment. So let us say you are doing audit of a company which has got receivables from the market, and there are let's say 1,000 line items, 1,000 vendors from which the company had to receive the confirmation or to receive the money. As an auditor, you want to know whether these 1,000 people, their balance which is shown is right or not, is giving true and fair picture or not, the sundry debtors balance. So what you will do, you will apply sampling technique. Sampling, you will pick up some samples and then you will send those confirmation letters. So first, what is required to be confirmed? Do you want only the closing balance to be confirmed? Or do you as auditor want to confirm the transactions also which has happened during the year? This is something which you will need to define. What kind of samples you have picked up and why you have picked up those samples? What is the approach which you had applied to pick up those samples? You will need to have a document mentioning that, okay, this was the sampling technique which was used and why there was no bias into this. That means, we picked up, we used a random table or we used a specific tool, which provided us random samples, or you picked up top 5 and other 5 were at a random so that you can also take care of the materiality aspect. So you need to identify specific information which you need, on which you will need a confirmation. And then based on your risk assessment that, okay, these things are high risk, so I want to have 100% confirmation on these. And then whom to contact. So when you are taking an external confirmation, with whom you will go and to whom you will communicate. So let us say in case there is a sundry debtor or in case there is a balance in the bank, with whom you are communicating. So if you are having a bank account with UCO Bank and you are writing a letter to Punjab National Bank, so perhaps that is not going to be sufficient. Appropriate third parties or direct knowledge of the information is very important. So if you are using the tool, you need to send the information or the confirmation to that party only. And what time you have in order to execute and get these confirmations. So for example, you are doing audit of a company which is having their year ending on 31st March. And let us assume it is a listed company and their audit committee meeting is going to happen on, let's say, 22nd of April. So you will have only 3 weeks time in between. How will you ensure that your external confirmations which you are sending, whether you will be getting enough response on that? So here is a practical issue, and here is a practical, advice which many people are using. So they keep everything ready just on 31st March and on 1st April morning, they'll pick up the balance and use these tools to send the confirmation, request. But at the same time, they also ask the management to follow up whether the bank or the people from whom this confirmation has been asked for, and to request them that please respond to that mail which has come from the auditors to provide confirmations. So as an auditor, how do you design these confirmation, keeping in mind the time, the people to whom you need to send those information, and what exactly is required to be confirmed? This is the guidance which has been given in this auditing standards. Now, there are different things which you can ask for when you are sending a confirmation. One is very simple, that, okay, outstanding receivables, payables, cash positions, you can ask for these confirmations. Like, for example, I discussed this point on the sundry debtors or receivables from the market. You use the sampling technique and you say that, okay, please confirm these are the balances. This can be applied to the creditors also. It will be applied to the banks or other institutions where the company is maintaining their cash. So one is you want a confirmation in terms of balance, which is outstanding and appearing in the balance sheet. Then you can also take a confirmation, and many companies, many places, there are confirmations sought for by the auditors, where they ask for key provisions of the contract terms. What are the modifications? So in case there is a contract with the third party, and the management say that, okay, during the year there was a change or there was a modification in the contract, there was a change in one of the terms, and here is a letter which is saying that the terms have changed, and that change is having a significant impact on your financial statement. It is appropriate that the auditors will write to the third party and seek external confirmation that, okay, we understand that there was a change in the terms. Can you please confirm whether these changes were done, or whether these changes were acceptable to you? Then there are confirmations related to performance obligations. So in the companies where the large contracts are there for recognizing revenue, whether the performance obligations have been met or not, because the company might have recognized revenue in accordance with the Ind AS 115 if they are using Ind AS as their accounting framework, or in case they are using AS framework, then whether AS 9 conditions have been met or AS 7 conditions have been met. So those performance obligations, the auditor can always write to the external party or the third party with whom the contracts have been entered with, whether those performance obligations have been met or have not been met. So through those confirmations, the auditor will come to know whether the revenue which has been recognized by the company, by the client, by the auditee, whether that revenue is appropriately recognized or not. Then there are third kind of confirmations, which are guarantees and securities. So there are collateral arrangements which might have been done. There might have been warranties given by the companies, or there are contingent liabilities which are shown in the financial statements of your client. So let us take an example of a company which is into a real estate sector. There are so many legal cases going on. The company might not have a complete grip on all the cases which are going on in different parts of the country. So the auditor may write to an external person, maybe a lawyer, and ask them that please use please give us a confirmation that, okay, these are the contingent liabilities, or these are the cases where the company is showing them as contingent, and whether they are what are the chances of the company is winning or losing the case. These are very critical ones, because ultimately what provisioning is done by the company on account of these contingent liabilities, the auditor will need to get a comfort or need to reach to an opinion or a conclusion whether these contingent liabilities which have been shown, or the provisioning which has been done, is appropriate, and it will not impact the true and fair view of the financial statements. Similarly, if the company or the client has given some kind of warranties, the auditor may write to the external people who have to whom the warranties were given, that in case there are any issues around those warranties, which would require the company or the client to book a provision, to make a provision in their financial statements. To take an example, if you have given a warranty of performance and that there is something wrong which has happened, if the external confirmation has gone to that person will say that, yes, there was a warranty given by this company, but there is already a delay which has happened. And according to the contract terms, according to the terms of warranty, the company is liable to pay this much. And then you can go back to the client and say that where is the provision for that payment, which you have to be the payment for which you are obligated already. There is a liability which has already got created. Similarly, collateral arrangements, let's take an example, simple example. So if the company has taken a facility from a financial institution or a bank, and there were some collateral arrangements or the securities were given, it is always appropriate. The auditors may go to the third parties, which is the bank or the financial institution, and say that, okay, these are the collateral securities which are lying with you. Can you confirm they are still with you? The banker may come and say, no, we have already given it back. So then the situation will be different. So there are different kind of confirmations, which can be taken from the external parties or the third parties, where auditor may ask for accounting bank, the balance, account balance. They can also ask a confirmation for the contract terms. They can also ask for a confirmations on guarantees and securities. Now let us look at a case study like we were discussing in the beginning. In this particular case, the auditor had sent a confirmation letter to 40 external parties. 12 of those have responded, and one of the party, let us say, he denied, that person denies that there is a balance outstanding. So first of all, the auditor will need to have a work paper in their file, which will demonstrate that how out of so many, 40 were selected. And then in case, you have used a sampling technique, you will need to maintain screenshots or records of what kind of technique were used and why these 40 were picked up. So there can be different policies with different firms, different auditors. They can have their own policy of picking up the samples, but that policy, which is as per the audit manual of the firm, need to be followed. Like SQM1 earlier, SQC1, the standard on quality control in the firms which are doing audits. These standards, they require the firms to have their policies written down and circulated and to be on the record all the time. And the firm, while carrying out the audit, or the partners which are carrying out the audit procedures, they need to follow the policies which have been mentioned in those, in those firms. So in this particular scenario where 40 confirmations were sent, 12 replies were received, and one person denied. So it looks like the scenario is talking about confirmation related to receivables. Now, if the management say that, okay, we will give an explanation to you that, okay, these 12 replies received, one debtor's, one debtor has denied, but we have actually spoken to that person, and that person has now agreed that this amount is lying there, is so maybe this explanation of management you need not accept, because this may give incorrect picture, and this is not treated as sufficient audit evidence. There is another scenario. The auditor may say that, okay, we had sent 40 confirmations, 12 we have received, other 28 we have not received. One we have received, that debtor is denying that this debtor does not have this much balance. So we can ignore, because in the overall scheme of things, this amount seems to be below materiality. But please remember, out of all the debtors, you picked up some samples. And from that samples, one person has denied. So you will need to carry out alternate audit procedures, or maybe you need to enhance your substantive testing in order to reach to the conclusion that you can actually rely on these balances which are shown in the financial statements. Because if you just ignore the reply received on these confirmations, if you just ignore, then that means you are violating the auditing standard. But perhaps actually what you should be doing is you take up this case, do alternate procedures, and if the management is saying something, get again confirmation, external confirmation from the same person. And you need to do reconciliation and check the receipts which are there. For example, this person might have given money after the March ending has happened, and that's why this person is saying that I do not owe any money to the company. You will have to see whether this money was actually received in the bank account of the company or your client or not. Then there are many places where you will find that the person to whom the confirmation was sent, that person raised a dispute. It's very much possible. So the client of yours, where you are doing an audit of the financial statements, in the financial statements, there is a debtor which is showing a balance of, let's say, X amount. You send a confirmation letter, external confirmation letter to the person, whether through tool or in physical mode, and that person responds that no, you are saying that your books are showing X balance, but according to me, the balance is Y. So you need to see why there is a difference between X and Y. What is the reason of this difference? And you will need to investigate it further, understand what is the reconciliation items, what are the disputes, why this person is saying like this, and whether the statement of affairs is showing this balance is it is giving a true and fair picture or not. And in case you realize that okay, the company is not giving the right balance, person has done the dispute, let's say in this case, this debtor, and through your alternate procedures, you realize that whatever this debtor is saying is right. This company does not have this much receivable from this person. And if your audit procedures also confirm the view taken by or the view given by the debtor, which is in the response, and if the variance is above materiality level, you may think of modifying your report, put a modification in your report. But before that, you will need to have an answer from the management also. So please remember that there is a difference of view between the client and the auditor when the modification come into play. And one of the precondition is that the amount needs to be above materiality level. Also, there are some places where you are reporting on the regulatory aspects, or when you are reporting in the true and correct framework, then perhaps the materiality might not play that important role. But otherwise, you will need to see whether this kind of variance is requiring a modification in the audit report or a qualification in the audit report or not. But you will need to carry out your verification procedures as an auditor. So there are strategic choices which an auditor need to make, which are the places where you will need to send a blank confirmation. Blank confirmation, like I mentioned, that okay, you sent a letter saying that please confirm how much is the balance of my client in your books. Probability of getting a response is very low, because generally people do not respond to such requests. Ultimately, it's a human psychology also. If you ask them to, so they will always have a paucity of time, and they will always have a fear in the mind that probably I might miss out on some number. But if you fill up the number and send a confirmation with a positive confirmation requirement, that, okay, in the books of accounts of our client, this much amount is appearing. Please advise if this amount is correct or not. This is the most used confirmation requests, which are positive. But then it is also advised by the auditing standard that for high risk balances, this is the best approach. Then the easiest one is where you are looking for a negative confirmation. That means when you say that, okay, if we do not get a response, we will assume that your numbers are right. There may be it's cost effective, but it is less reliable, because if the amount is not right and if that person is not giving a response, there is a probability of misstatement. So this approach is used when the internal controls are very, very strong. Like, to give you an example, if you're working in a partnership firm and that firm is working as chartered accountancy firm, and you want to confirm from the partners whether the client which you are going to accept, if there is any independence issue or not. So these partners very well, and there is no independence breach. Then you can issue a letter or an email which will demonstrate that, okay, only response only when there is a challenge there. Otherwise, there is no need to respond. So those are the negative confirmations which are easy, which are cost effective, but are slightly less reliable than the positive confirmations. Now, what are the complications? What are the practical issues which we face when you're writing or when you're sending external confirmations, and how we should address those complications, maintaining our audit quality? So I give you an example. Let us say you are auditor of a large company which has got suppliers or the people to whom that company is sending goods, manufactured goods, and those are all over the country and all over the place. And you have not one client of this kind, but let us say there are 3 clients of similar kind. So you are sending confirmations for their sundry debtors, which are receivables for all the 3 companies. You are sending letter of confirmation to all the banks. And in case they are multi-states, so there are banks all across. Then you are sending letters for accounts payable, balance outstanding in the balance sheet. So there are 3 companies and different kind of audit confirmations you had sent, and your reception area will be filled with the responses which are coming from all 3 different companies. And many times the letter which is coming in response to your letter, it's like just giving the firm's name. Somebody will have to open the envelope and see which partner it belongs to, and then which partner and which manager, and how they are going to be. So it will require a lot of effort. For that, these tools become very, very helpful, because it will go and get it parked. But what are the complications? What are the practical issues? One is you do not receive a response, or you receive insufficient response. Second is if there are reconciliation issues. Third is that in case there are, negative confirmations or the negative response. So how do you deal with all these issues? So let us handle them one by one. If the confirmation, they do not arrive or they do not come, then there can be a situation which is there can be different kind of situations. One is the delay is, delay is there in your response which you are receiving. So many times, it is because it is not mandated. So your debtors may just ignore the letters which you have given as auditors. So sometimes the waiting period becomes extended beyond a reasonable time. So that means you will need to tell the client to follow up with the debtors to give you a confirmation. Like, for example, if you have financial institutions who have borrowed money to your client, and those financial institutions are sitting outside India, so probably it will be prudent that you will ask the client to communicate with them directly that please, there are request letters or the confirmation letters will be coming from our auditors. We request you to please respond to them. So, and this proactive approach will help, you're getting the confirmations in time directly from the external parties. Many times the challenge is that there's a complete silence. There may be some kind of cold war going on between the client and their customer. Customer just doesn't want to respond to the query. So then what should you do? You should actually apply alternate audit procedures, which will, which is always required in case of no response. So you need to have your backup audit strategy on what if the response doesn't come. It may be delayed or it may be just complete silence. Basically, what kind of analytical procedures you need to carry out and how will you get alternate audit procedures? Someone can say that, okay, I will do alternate procedures only. Why there is a need to send a confirmation letter to the external parties? But please remember that, under the Companies Act, you need to carry out audit following the auditing standards, following the guidance which have been given in the auditing standards. So these standards require you to get external confirmations, and you just cannot ignore that these auditing standards. So even if you are carrying out your alternate procedures, but please remember that sending confirmation and getting response, this is something which is the guidance of the standard on auditing. And it is not only within India, outside India also, it's international standards on auditing also give you similar guidance. Actually speaking, all these Indian standards on auditing are in alignment with international standards on auditing, except one or two cases where there are some exceptions. So now there can be a situation, which is another practical situation, that management say that there is no need for you to send the confirmation, or we will not allow you to send external confirmation. It can happen in 2-3 scenarios. One is that the management is on the wrong side of relationship with the bankers or the debtors. Like, for example, if the account is not regular account, management or the client has taken loan from the bank, and the principal repayments or the interest repayments are getting delayed. So your client may say that, no, I will not speak to the banker, or I will not go there, because if I go there, they'll be following up for my payments, which are not there in my bank balance, which are not there. So what should I do? I am not in a position to go and tell the banker that they should respond to your request for external confirmation. And you go and tell the management that, no, it is necessary. Similar case can be, there can be some kind of dispute with the receivables. And third kind of scenario, the company does not want to give commitment to the creditors that they have to pay this much money, because some negotiations are going on. And if they send a confirmation letter, that will be an evidence that the client is committed for paying this much as per the financial statements. So the management does not want to give that kind of commitment because they are in the process of negotiation. So what do we do? So first of all, in case there is a refusal from the management, you need to, as an auditor, you need to first evaluate the reason why there is this kind of refusal has come. There may be a potential red flag. There may be a situation that the balance might not be correct and materially misstated balance might be appearing in your financial statements. So you need to be using your professional skepticism to evaluate why there is a refusal. And once you have done that kind of procedure, once you have understood the reason, then you will need to communicate with those charged with governance, TCWG, those charged with governance. You need to communicate with them. So tell them that management has refused and this is the reason and this is the potential impact on the audit opinion, because in one direction, this may be taken as a scope limitation as well. So very important point for the auditor is to communicate with those charged with the governance. Then there are red flags, when there are responses which, come to you and you realize that the letterhead is not appropriate, the formatting is not good or not appropriate, or there are some inconsistency in the information, like the phone numbers or the email IDs are not right. So these information, these kind of, if you find these kind of things are there on the confirmations, they immediately raise a flag, and you should be digging it a little more. So you need to have those kind of red flags. And also responses coming from unverified email addresses or domains. They are coming from, so if somebody is working in a large multinational company, and if the response is coming from their Gmail account or a personal mail account, so you can always say that there is a red flag. Perhaps it does not match with the non-contact information. So once you receive these kind of confirmations from external parties, which are responses which are not very much reliable, you need to say that, okay, there is a red flag there. And in confirmation process, there are fraud risks. There is always a chance. So if you are using a tool, there is a chance that somebody may do an interception. Somebody may enter into the communication which is happening between you and the third party. So there can be interception. There can be response which can be sent to you against your confirmation request, which can be misstated, which can be false information, or this may be a case of fraud. So many people, what they do is when they carry out their audit procedures, in the engagement letter itself, they say that we will be communicating through emails and through electronic modes, and we would be doing it on, there will be some risk involved, and we will ask management to take responsibility of that risk. Having said that, having that kind of clause in your engagement letter, still, as far as third-party confirmations are concerned, if you are using a tool, I repeat, I had mentioned it some time ago in the same presentation, that in case there are any interceptions or any misstatement because of using the third party, the responsibility here lies with the auditors only. You have to make sure that whatever confirmation you are getting, they are from the reliable sources and they are from they are giving a right kind of response. There are other concerns like collusion. That means management person, they collude with the third party. So let us say, let us say you have written a confirmation letter and saying that, okay, this client of mine, I am doing the audit, and the financial statement is showing a balance receivable from you worth 50 million. And the client goes to the person, says that, okay, please respond positively to the auditors and do not give the right picture. The balance which is shown in our financial statement is, don't tell them that this is the wrong one. So management may collude with the external parties, but then the auditor's role is, auditor will look at it from all perspective. So auditor will first look at the authenticity, whether the confirmation has come through independent channels, and whether the alternate audit procedures are throwing any red flag or not. Then there are discussions happening around electronic or traditional confirmations. So email vulnerabilities are very common nowadays because there can be spoofing, there can be phishing. So that means if you are there and if I request you for a confirmation, somebody can send me an email which will appear like it has come from your email ID, and that person can give a confirmation on that. There is a possibility of that. These email vulnerabilities are there. Cyber crimes are happening left, right, and center. And there are a lot of education. There's a lot of education which is floating around to be careful about these spoofing and phishing attacks. Then there are unsecured transmission challenge. This is also one of the vulnerability in email environment. And also for auditors, it is difficult to identify whether the verification has been sent by the right person or not. Then what should we do? Basically, encrypted communication protocols need to be followed, and only the contact information which is verified, the email should go to them. And basically, what you can do is you can only minimize those risk areas. But basically, because you are using electronic format, you will enhance your efficiency, because all those confirmation will come, will get sorted, will go to different pockets, so that your audit file will be completed. Then there are third-party portal confirmations are also there. Like, for example, I mentioned about bank. So like institute is developed, has helped in development of one tool. So when the bank portals are there, these financial institutions, these portals are more secure online portals, and the banks are responding to these confirmation requests. So there are some fintech platforms also. They also do provide help to the auditors. But please remember that they still the responsibility of getting external confirmations lies with the auditors only. Okay, there are, in case there are differences, what should the auditors do? So according to the Standard on Auditing 505, handling exceptional differences, this is something which is very, very important for you to understand, that in case there are exceptions and in case there are differences, what kind of procedures or what the auditor should be doing. One is there are timing issues. there can be potential misstatement if if you're receiving your response after a very long time. So you need to carry out your cutoff audit procedures, and you need to do analysis of transaction dates, and you need to see whether the delay which is coming, whether this is also raising a red flag or not. Then also required for the auditors to do reconciliations. Many times the books of accounts are showing balance A, and the confirmation letter which you receive from the external party is showing balance B. What is difference between A and B? Why there are differences? And these reconciliation need to be seen by the auditors. And also auditor need to keep in mind the materiality concept also, because every difference of a small amount cannot result in the qualification. Then the impact has to be seen, whether the these exceptions and these problems which are there, the variances, they require you need to whether they require the auditors to increase the procedures, substantive procedures, or whether they need to do additional testing or not. So in case there are exceptions, you need to identify whether that is because of timing issue, and whether this timing issue is resulting in something serious. Then you need to perform reconciliation, and you also need to understand the impact. Then one of the challenge which the auditors face, when the year end happens, there are always a very high voltage stress which is there because of the target dates of the audit committees and the financial statement finalization, especially in case of listed companies, because you have very limited time, and by that time you will need to send out the rollout, the confirmation, need to see the responses, understand the reconciliation, understand the impact, need to enhance your audit procedures in case those matters are not resolved, and you as auditor will always be running behind schedule, in order to meet the timelines. But this is something you need to see which date you are receiving the confirmation, and whether the confirmation is giving you a balance which is as on the balance sheet date or as at the balance sheet date. If you are receiving a confirmation, the client, you say that, okay, on 31st March, there is a balance of 50 million. But the auditor, the response comes and say that, no, we have only 10 million outstanding as on today. So there is a difference between the date which you had mentioned and the date on which the response is coming, or the date which response is mentioning. Now, a big challenge is being faced by the auditors when they are doing a confirmation on legal claims. Many times the lawyers, they refuse to provide confirmations on pending litigations. And they say that, no, we are in a privilege kind of situation. There are client, sensitivity is there. We cannot give you any further detail, any detail. So what should the auditor do when you have to have those kind of your client has got those kind of situations? So basically, you need to understand that there is evidence which you have in your file, there is a limitation, and a similar kind of limitation is there on your audit opinion also. If there are significant claims on the client and the lawyer is not giving you any answer, then probably you would like to consider whether a modification is required or not, because it depends on materiality. It depends on what kind of seriousness in that confirmation letter is. So when external parties or the lawyers are citing privilege issues, the auditor just cannot remain silent, cannot accept, okay, fine, I understand there's a privilege issue, so we cannot get. No, that's not the situation. The best way is to do your alternate procedures, look at the impact, look at the reason why there was this kind of refusal has come, and what are the implication. And if required, you can have a legal team in your audit, a part of your audit team, and you can carry out those procedures. Now, there are professional skepticism in audit confirmations also. As you see in today's world, when the auditors are carrying out the audit and you see the orders which have been given by the regulators, they always want the auditor to be more suspicious about when they are doing audit of any transaction, or they want the auditor to apply the professional skepticism. That means everything you look at it with that doubt, everything you question, and then only you will be able to say that, okay, I reached the conclusion that I'm able to give a true and fair opinion. So you need to have a professional skepticism in all the procedures, not only the external confirmation procedures, but all other procedures as well. That means you need to have a questioning mindset. That means have an attitude where you will ask question about whatever stance was taken. So you need to question what the management is saying, what representation they are making. You need to challenge the transactions, management estimates, management judgments. Verify the information which you have received independently. And whatever conclusion you are reaching at, in case there are variance, or in case there are no variance, you need to document that and write your conclusion on your audit work papers. But very important part is that when you're doing your audit, you need to apply this professional skepticism concept. So that means clients say that, okay, I have taken this call, and I have used the physical life, useful life of a machinery to be 25. So if they say that, okay, 25 years you have taken as a useful life of the machinery, why 25 years? Why not 30 years, and why not 20 years? So you need to raise question on both sides. So if balance is lying there, you need to, and you have sent a confirmation, you have received a confirmation on the same day. You need to have your professional skepticism raising an eyebrow that how can, you get a confirmation on the same day. So use those questioning minds and challenge the unusual transactions is what Standard on Auditing is saying. Then how much reliable are these confirmations? If these confirmations have been directly sent and you have directly received it, then you have to put it in a file that, okay, this gives you higher level of confidence. Actually, whenever you receive an independent confirmation from a third party, it carries much more weightage and it is much more reliable. And then red flags are also, you need to look at those red flags, whether unusual responses are there, the pattern are there, and then you have inconsistent information. So let us look at this case study where the bank confirmations were received. You are an auditor of a company. You have sent a confirmation letter to the bank saying that, okay, the company has got this much balance in their bank account. But the mail which you have received, it doesn't appear to be coming from the same bank. or this email ID doesn't appear to be matching with the bank's official website. So there is something not right, and this particular scenario will test your ability to recognize the potential frauds. So there might be a indicator of a potential fraud, and you will need to apply the professional skepticism. So in one of the case, I remember that the auditor, when they received such kind of letters, which doesn't appear to be coming from the same bank. So what they did, they sent their audit team member to the bank along with the client representative and asked their team member to directly speak to the banker and take a confirmation letter there and then. So those kind of procedures can be carried out. Those can be, those can be the ways you can mitigate your risk of fraud. So there can be various situation that come out of this kind of scenario where you have received a letter from the bank which is appearing to be incorrect. If the client is giving you if you go and ask the client, oh, I have received this confirmation, but it is not appropriate, it appears to be not appropriate, this is wrong. You can say that, okay, this appears to be, this completes my audit procedure, this is genuine, this is also not right. You can say that, okay, this letter I have received, but I am also, I feel that this balance which is shown is correct. This is also not a right way. You have to independently work and verify with the bank. Like I had given an example that you can send your team member, but basically your responsibility as auditor will be to ensure the authenticity and reliability of the confirmation which you have received. Now we come to the key learnings. Independent verification, the auditor should never rely on client validation. That is not required. This standard says, SA 505 says that the confirmations need to be direct, need to be from the external parties, and the client validation is not sufficient for suspicious transactions. Wherever there is a red flag, the auditor must take immediate action and verify from an independent channel. This will protect the integrity of the audit also. Now, what kind of documentation is required? What kind of standards are there in order to do communication? One is, you need, as an auditor, you need to make a document that, okay, these are the samples which I have picked up from the receivables. These are from the bank balances. These are from the creditors. These are from the borrowings. And these are the samples. So you need to write down how the sampling was done. You need to collect evidence how the sampling was picked up. Then whatever letters you are sending, keep a copy of that or keep a track chart of, okay, these many 250 letters we had sent, which all responses are coming. You need to maintain a file for that as well. Then these replies, somebody from your team, audit team, need to look into whether the reply is matching with the request which you had sent, or whether the replies had a variance. And in case there are variances, then whether the reconciliation is available or not, or what kind of conclusion you are going to make after you have done the alternate procedures. So that means if a client is saying that, okay, my balance is 0, but you had sent a confirmation letter for a few million rupees, then you have to see whether the amount was received and there's a mismatch, because the customer of the client might have given a check on 31st of March, but the client might have received it on 1st of April. On 31st March, your client is showing a receivable, but in the books of accounts of the customer of the client, the account is 0. So if there is a reconciliation and your alternate procedures, they verify that, okay, there is no challenge, the balance, there is no miscommunication between it. Then you need to ensure that whatever procedures you have carried out for external confirmations, you are communicating those with those charged with governance. So generally, when the audit committee meetings are happening, especially when you are doing audit of a listed company, one of the slide which you present to the TCWG contains that how many confirmation and how the sample then what is the impact or what are the risks involved. And you also need to tell the TCWG that what alternate procedures you had carried out. It is important for you to communicate to the people who are charged with governance that what are your concern areas. Like, for example, in case there are legal confirmations and you are not receiving it, you may have a discussion with those charged with governance. And you can find you can have a two-way communication with them that, okay, this is the challenge we are facing. This is how we plan to resolve this issue. And what are your opinions and what are your suggestions? One of the important aspect is that if the management say no, you cannot send the audit confirmation, external confirmations, you may treat it as a scope limitation. This is a very serious matter, and many times the auditors, when they are not able to get this kind of freedom to write or to get the confirmation, they may want to walk out of the assignment. Also, you need to see what is the materiality when you are sending confirmations. Please have a close look at what you are arriving at, whether the differences which are going to be there in your confirmations are, so if there is a balance of, let's say, 100,000 and you are trying to get a confirmation of few hundred rupees, then whether it will have an impact on your materiality levels, or whether it will be much below your materiality level, and whether it is going to have an impact on your conclusion or opinion on the true and fairness of the financial statements as a whole. And then whether you are required to give a modification in the audit reports. So key takeaways from this particular scenario is that you need to maintain as an auditor your professional skepticism. Always question and verify suspicious confirmations. You need to follow keep your documentation thoroughly, as you are aware that when regulators are coming to see your audit work papers, you cannot tell them that, no, I picked up the phone, I spoke to the person, and that person said that the balance is right. This is not an audit evidence. Even if you might have actually done that and you're sure that the number appearing is right, and the balance confirmation was told to you on the telephone by the person, but have you documented it? What kind of recording you have for that call, and what kind of audit evidence you have? Because tomorrow, if the regulator is coming, they would want to see whether you complied with SA 505 or not, whether you issued external confirmation independently or not, and whatever you have done. So one is what procedures you carried out. Second, what responses you received. And third, what did you do with these responses? And then once you have done your activity, whether you communicated with those charged with the governance or not. Now, let us see some of the case study when you are, doing these reviews. So one is the management refusal. if the management is not allowing you to send the confirmation, and the management say, no, it is a confidential matter, you cannot send confirmation to this particular borrower. Then you need to choose what kind of what kind of response you want to put it in your audit work paper, whether you would like to do a modification, whether you want to do a scope limitation, whether you want to ignore it on the materiality ground. Then the second decision critical will be what kind of confirmation you need to float, whether the positive or the negative confirmation. It is always recommended that for high risk balances, you must have the positive confirmation, and negative confirmations can be for smaller items. And situations which are practical situation is when you do not receive a reply to your request for external confirmation. Now, there can be a situation that a management, you go to the management and say that, okay, as a authorized signatory, please sign on this confirmation which I plan to send. And the management refuses. Then you need to, you will have different option. Option one is that, okay, you say that, okay, you are not signing, we will not carry out this procedure. Wrong. You say, okay, you are not signing, let me modify the report. Wrong. You say that, okay, you are not signing, but I am still sending the confirmation. This is also wrong. This is unprofessional. You need to do audit procedures, which are alternate audit procedures, and you need to inform those charged with governance that this was the reason. This is where the management did not agree or they blocked the confirmations. So this is a practical scenario which comes out. And the learning is that you will need to evaluate why the management is saying like this. There may be a real situation which requires management to carry out those kind of confidentiality, or there may be real, difference of opinions which might be there. May not be in terms of balance, but in terms of future contracts or in terms of some negotiations which are happening with the company. So you need to see that what alternate procedures you have carried out and whether you have informed those charged with governance or not. Then whether for high risk receivables, you would like to give a negative confirmation, request for negative confirmations that, okay, this is one bank account and we are sending you a letter, and if we do not receive the confirmation, we will assume that the matter is, the balance is right. These, high risk areas, the acceptable approach will be to send a positive confirmations. Although your negative confirmation may save your audit time, your analytical support is already there. Management agrees for that. You can carry out, but please remember it always remains at a high risk level. The standard says that high risk require positive confirmation, or your reliability on those confirmations will be very critical. Now, another case where you have sent 30 confirmations, response have not come from 20 out of 30, and there is a significant gap in the evidence. What should you do? How should the auditor handle this non-response rate? So there can be, you need to carry out your substantive testing. You can examine whatever invoices were there and whether there was a supporting documentation to prove that, the non-response does not indicate a fraud. Then you can also check whether the invoices were already paid subsequently, and if they are not responding customers, but they have actually paid the money, so they do not feel there is a need to respond. And then you also need to track if there are shipping records which are available. Please remember that non-responses are no audit evidence. So silence doesn't mean the agreements. So there are some real life challenges which one face when they are doing the external confirmations. So like in one case, the customer disputes a balance of 15 lakh. The auditor, they carry out reconciliation and examine credit notes to resolve the discrepancies. And then auditor will come to know that, okay, this what the customer is saying is right or not. And accordingly, the books of accounts are carrying those entries or not. Then in the bank confirmation verification, another scenario is that email confirmation received but appears suspicious. The auditors may call up bank officer directly, to verify the authenticity, or they may send their team member to the bank, depending on availability of time. And then a related party, this is also one of the area where the auditors feel a little bit of challenge, where related party transactions are there, where unusual round tripping might have happened, the transactions might have happened. So you need to carry out additional audit procedures. So the learning from this case study is that you need to have a reliable evidence, which is your first priority. And second is you need to have the professional skepticism, and you need to have a thorough documentation. All these will ultimately culminate into your communication with those charged with governance. And you need to really have your teams understanding the requirement of external confirmations. So this is all in this presentation on external confirmations. So I will stop presenting my slides and will open the floor for question and answers. So our colleague Vivek will help us in case there are any questions on the portal.
First of all, I would like to thanks to you for sharing such a valuable insights on SA505, that is on external confirmation, and also also covering the practical aspects in form of case studies. So, sir, I also would like to in session we have joined by more than 600 members in today's session, sir. And sir, we have received some of questions from the members, and most of the questions you have covered in the presentations, and some questions I will take. So I request you to please take these questions, and I will read the questions and also put the question in chat box for your reference, sir.
Okay.
So the first question is that the auditor sent a confirmation request to a major customer. The response is routed back through the client email without direct communication from customer.
Yeah, we have had a discussion when when you have this kind of situation, this will raise a red flag, and auditor must carry out their alternate procedures to understand. Like we discussed a similar case when the bank confirmation was asked for. So the auditor will need to communicate directly with the customer, and that customer need to send the confirmation directly to the auditor. That is requirement of SA 505.
Okay. And so the next question, if a large of its finished goods inventory at third-party warehouse, inventory constitute a material component of the entity total assets and is therefore significant to the financial statement. The auditor was unable to attend physical stock verification due to certain legal restrictions, and the warehouse operator did not respond to confirmation request.
Yeah. So ideal situation is that the independent confirmation should have been taken from the warehouse operator. That's the ideal most situation. Better than that would have been that if the auditor's team would have gone and attended that physical verification process. So now the standard on auditing SA 505 says that in this case, there are auditor need to use professional skepticism. They need to carry out alternate audit procedures. They need to document which all procedures they have carried out. And then they need to consider whether there is a requirement of a modification or whether there is a requirement of, if their other procedures are agreeing with it. But in any case, they will need to communicate to those charged with governance about such kind of scenarios. So basically, auditors need to document why they relied on these numbers without external confirmations.
And sir, in the next question, that in case of related parties, confirmation may not provide reliable evidence. So how should auditor address such situations?
So basically, SA 505 says that you need to have an external confirmations. And in case of related parties, confirmation may not provide reliable evidence. That's not probably a true statement. If you are taking a confirmation from an external party and the confirmation is directly coming to you, that would be sufficient enough to have your compliance with the audit SA 505. But in any case, your alternate procedures will also be critical, and you will be providing information to to those charged with governance that, okay, these many confirmations were given, floated, these many we have received, these are the variances, this is how we handled the variances.
Okay. And so the next question is related to electronic confirmation. So what precautions should auditor take while relying on the responses received through digital confirmation portal or emails?
So basically, your other audit procedures and your alternate audit procedures, they will also give you a comfort. Many people across the globe are using these portals and these tools to get the confirmations, but your alternate audit procedure should not raise a red flag, so that the tool which you are using, they are having a appropriate license, and like we discussed in the beginning, that even institute is helping in development of one of the tools. So those kind of tools will provide you more reliability.
If our debtors confirm a balance different from the client books, so how would we evaluate this exception?
So I think you need to replay the presentation, and this issue we discussed at least 4 to 5 times. There has to be some reconciliation done, and then the auditor will need to find a way what all is resulting in those variances. And then they should look at it from materiality perspective as well. And then they need to take into consideration what all options are available with the auditors. Modification, disclaimer coming out, or below materiality, all those kind of procedures, and then how to inform to those charged with governance. Most important is to have a documentation on whatever activities have been done as audit procedures.
So thank you, sir, for taking these questions. And I also thank you to all the participants for joining today's session and make it interactive. So thank you, sir. Thank you, all of you.
Thank you so much, Vivek.
Thank you, sir. Hello, technical team. Yes, we can close.